Chris, I've got to start with you in these markets. What does curve flattening signal to you? Higher two-year yield, 10-year comes in, a new curve flattening. What does it signal to you and to Chairman Powell?
Well, it seems to be that not Chairman Powell, but a lot of the members on the committee fear that they shouldn't keep raising short-term rates because it'll cause the curve to invert. And when the curve
Should they fear that?
I don't think so. And Powell said directly, no,
yes,
you don't fear that. The reason the curve inverted in the past was inflation got out of control. Fed had to raise rates too high. If anything, it's telling, when the curve starts to flatten, it's telling Powell as the chair that maybe we're not going into a recession.
Okay, there's the expertise of Chris Rupkey, just fabulous on market dynamics and rate dynamics. You come at it from a more GDP standpoint. Is GDP or the expectation of GDP telling Chris Rupkey what that curve's going to do?
I think the flattening of the yield curve is saying that the Fed ought not to be increasing interest rates. I've long maintained, Tom, on your program that the Fed is not going to raise interest rates even 3 times this year, let alone 4, when that was the consensus.
What will be the catalyst to get them to adjust? And where are you on this, 3 or 4 this year?
3 or 4. The committee's split. I'm split.
You're pushing against it. I love this disagreement. Great. But what's going to be the catalyst to destroy Chris Rupkey's afternoon one day?
I think what is going to do it is, first, we are seeing the developments in Italy. It is coming from abroad for the first time. Second reason you're going to see is all the trade wars with every single trade ally now ranged against the United States. And all of that is going to have an impact on GDP growth. You cannot have continued GDP growth, corporate profitability doing so well when we have trade conflicts with different parts of the world.
To defend this, and Chris, this is important, we heard interview after interview today that Europe's actually doing very well given the political dimension in that. Where's your GDP estimate on the United States of America 12 months out? Is it 3-ish?
Well, no, we're probably not going to, maybe some quarters, maybe you get 3 quarters close to 3% like last year, but there's always one soft quarter, so we never quite make it to 3.0. But we were 2.6 last year. 2.6, the target's 3. I mean, we're pretty close.